Hello, this is Collar of Sublime Trading. In this episode of Mentoring Mondays, we're going to cover the risk aspect of trading. Risk is an area of trading that many traders are not even aware of, but plays an important part in making your trading a success. Capital preservation is a must, and understanding and implementing risk keeps us in trading over the long term, which is what we all want. Remember, if you run out of cash by wiping out your account, then your dreams of trading will be over just like that. So how do we manage our risk? We start off by having a predetermined percentage of our account that we want to risk on each trade. If we look at what many traders do, you understand why many traders fail and often lose everything. They may start out with an amount, let's just say it's £1,000. Rather than thinking about protecting their capital, many think about what they can gain. They allocate certain amounts of their balance to each trade, so they might put £200 on Apple shares, £250 on the euro dollar, and £50 on Nike shares. If the trades go their way, then it will be good times for them, but if they lose, then half of their account will be gone just like that. To get back to break even when you're 50% down, you need to risk 100% of what's left in your account, which is not the best idea. This trader would not even be aware that they are risking 50% of their account, as their main focus will be solely on the potential gains. What I hear many traders say when they lose a lot of money is that trading is not for them. But it's not that trading isn't for them, they just made simple mistakes that can easily be rectified by making the correct changes. As I was saying before, we have an amount we make sure we risk on every trade. We cap our risk on each trade by 2% of our account. If we have £5,000 in our trading account, then our risk on each trade doesn't go over £100, which is 2%. If the trade loses, then we still have 98% of our account remaining. Theoretically, we will have to be wrong at least 50 times in a row to wipe our account, which if you have a good strategy would be really difficult to do. So never risk more than 2% of your account on any single trade. Regardless if it's a stock trade, forex trade, or a trade in commodities, the rule still applies. If your account drops by more than 10%, which is 5 losses, then you might want to consider reducing your risk on each trade to 1% until your account starts to grow again. Reducing the risk will give you the peace of mind, allowing you to trade risk-free. If your account by any chance goes down by 20%, stop trading and review your system before continuing. Maybe your strategy needs some tweaking or needs to be changed altogether. A 20% drawdown is not difficult to climb back up from and is a marker for when things in your trading may be going wrong. So take the time to reevaluate things. Also assess if trading mistakes were made, so whether trades were taken that should not have been taken because your rules were broken. The difficulties many new traders face regarding risk is saying no to the high leverage a lot of brokers offer, especially when opening a new account. Brokers offer leverage of up to 30 to 1, which means you can open an account with £500 and trade a position as though you have £15,000. Yes, the rewards will be nice, especially if the trade keeps going up in your favor, but all it takes is one small move against you to actually wipe out your entire account. Many traders get caught out by this, and believe me, the odds are completely against you right from the start. So you want to make sure that you do not trade with the high leverage offered. No matter how good a trade looks, never go over your 2% risk. Even the best looking trades can fail, so avoid becoming overconfident and increasing your risk to avoid this common pitfall. Based on experience, I can assure you the market will punish you when you are overconfident. If you have a losing streak, then take time away from trading to reevaluate your strategy. Only trade again once you are confident your emotions are in check and you are fully confident with your strategy. Trade mechanically. When you start trading again, remember rule number 1 and only risk a maximum of 2%. Taking care of your risk will protect your capital and ensure longevity in trading. Treat this as a marathon and not a sprint. Have a business mindset and an investor mindset, and you will be handsomely rewarded. Thank you for watching this episode of Mentoring Mondays. Don't forget you can catch all of our episodes each and every Monday.